All right, hey everyone, Mark here, Mark P Markets. Thanks for joining me for another Greenbridge Investing Market Analysis. I'm sorry I'm running behind. I appreciate all your patience. So I'm going to try to get through this quickly so that I can pretty much catch back up on my schedule. All right, because I can't go usually the full length of these, you know, they're pretty long. I'm probably not going to be able to do the full length, okay? So, but I'm going to try to get as much as I can in. So let's get this thing started. All right, so first things first, if you're new to the stream, I'm going to be covering Bitcoin specifically. We're going to talk about the price action, support and resistance levels, and potential setups, potential scenarios that I'm expecting over the following week. If you would like to see an altcoin or a stock, please share it in the channel now, okay? If it's an altcoin, please make sure to put USD or USDT after the symbol, because if I don't recognize it, I can look at the wrong symbol for 3 hours, and we don't like that. So you can do that. Also, if you want to mention what state or what country you're from or what city, that's always a fun fact. I'm streaming from the greater New York City area, also known as Northern New Jersey, in case you're wondering where my strange accent comes from. All right, so let's get this thing started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Okay, cool. Now, let me say just hello. Let's see what people that we have. Elizabeth, hey, it's good to see you. Mustafa, welcome back. Thanks for stopping by. David, Dan, Eligius, James. All right, cool. All our regulars, Peter. Okay. Schwartz, of course, my international man of mystery from Romania. Of course, I have my group of Romanians that show up in here all the time. Thank you. I always appreciate that. Okay, so let's get this thing started here. Today is Monday, and the first thing I like to do is look at the economic calendar. I have it off screen. You could look at any economic calendar just very quickly. You want to be aware of this because, again, like the week before, what did we have the week before? We had an FOMC meeting here, and we had a bunch of interest rate announcements around the world, right? So you want to be aware of those type of events. So let's just take a look, see what we have here. Today at 7:30 p.m. Eastern Time, looks like we have the Royal Bank of Australia meeting minutes. Okay, things like that aren't that important. On the 21st, we have Canada retail sales. These are not big market moving numbers. Bank of Japan monetary policy meeting minutes. Okay, again, nothing to worry about there. On the 22nd, Great Britain GDP, not a big deal. On the 22nd, also, we have for the U.S., we have GDP annualized and durable goods orders. Those numbers are usually not major market moving numbers, okay? They don't particularly move the dollar around. They don't move the stocks around or the bonds. Those are the numbers. Those are the markets that I'm most concerned with. Any kind of economic event that can push something like the dollar around can affect a lot of things, right? So that's really what you have to be most cognizant of. Also, keep in mind, this Friday, the markets are closed. Okay, the stock market here is closed. So that's probably going to affect volume across the board. We have the holiday. Saturday is a holiday here, right? Christmas or whatever. So something to keep in mind. This week, the market will obviously be going into holiday mode. In fact, probably for the next 2 weeks. Because why? Institutional traders, professional traders, they like to take their time off. Okay? So that usually has some kind of an effect, and it's something to keep in mind. Moves tend to be more muted or more erratic, and if there's some kind of dramatic news, sure, you can get a market move, but you have to be cognizant of the low volume environment, because a lot of signals and a lot of things that normally would follow through, there's much less of a chance of that. Okay, so just something to keep in mind as far as environment. Okay, so let's talk about Bitcoin. All right, so again, I want to get through this Bitcoin thing so then I can get to your questions. Now, here's the thing with Bitcoin. The recent price action here, let me get my, let me draw a little box in that area there. The recent Bitcoin price action, as you can see, it's been getting very congested in this area here, okay? Now, I wrote an article on TradingView that I published yesterday, and I talked about this area right here. And basically, there's a conflict here because we have the higher low developing, right, relative to the 42K low. That's all good. This location, the general location from the 42K low to basically where we are now, is a high probability location for a bullish reversal. That's still all there, okay? And we're holding 45,000 pretty much. It doesn't want to break that yet. But the problem is we're still struggling with a bearish structure. All these lower highs, okay? You have a lower high here basically, which was yesterday's high. You have a lower high here. You have a lower high in this area right here. Those are resistance levels. Now, markets that respect resistance levels are basically bearish. Now, I'm not calling this a bearish trend. It's a corrective structure, but it still acts the same way. What's the difference between a trend and a structure? Well, I like to think of structures as being more temporary. A trend is more like we're in a trend. Like this is basically the general direction of this thing, and it's probably going to be like this for a long time. That's a trend. The trend on Bitcoin is bullish, right? And that has not changed. But we have this corrective structure, which has been now persisting for a couple of months, right? That's normal. That's a corrective type of move. Now, we're in this conflicted area where it's a higher low within a broader bullish trend. I want to be bullish here. I want to be thinking long. I don't want to be thinking short. I don't like to short into lows. First of all, I don't short Bitcoin, but shorting into lows is just a bad idea, all right? Especially when it's a broader, higher low. So the thing is, though, it doesn't want to go anywhere from here just yet. And we keep getting these false starts. So that's why in my article I wrote about, it's really a better idea to wait for the structure to change. Now, I see I have a question about that here, so I'm going to address that here in a moment. But the point is this. In this situation, you want to keep an eye on the bigger picture, okay? And this general location basically points to thinking long. But there's no confirmation for longs. We keep getting these fake out type of moves. Also, if I'm right about our broader wave 4, which, I mean, so far it seems that way, then we're likely to get a lot of false starts. Even a false start, by the way, is something that can look like this. We get the structural change. It starts to go somewhere. It finds some resistance up in this area here, and then it flounders again, okay, and produces another lower high there. That's a false start. And that's going to cause a lot of stop outs for swing trades. That's what wave 4s are like. Okay, so that's what you have to keep an eye out for. Again, this game is not about making predictions, right? People naturally think that's what it is. And then you have all these clowns that come out around now, and they say things like, well, I'm going to tell you where Bitcoin will be in the next 6 months. That's all, you know, it's for, think of it as entertaining information or infotainment, because that's all it is. There's no way to know, okay? And a chart will not help us know where this thing will be in 6 months. Some news can come out, good or bad, that can change the perception of the herd, and this thing could be at 30K, this thing could be at 25K, this thing could be back at 60K. There's no way to know. So on the short term, we have to constantly adjust for new information as the market provides it. And what are we adjusting? Our risk, okay? Our perception of risk and where we're evaluating risk from. So if you're aggressive and you like the idea of aggressive longs, well, this is an area for aggressive longs, all right? You would just, so far, 3 long signals showed up and 3 of them have gone nowhere. Okay, but at some point, one of them is likely to squeeze these shorts out, but you don't know which one, and there's no way to know which one in advance. So that's the aggressive idea. The conservative idea is you wait for the resistances to be broken first. Okay, this is very hard for people to do, especially people that are new. They don't like waiting, but this needs to be cleared first. Now, I see that question, and I want to answer that question now. I know I'm jumping ahead on the questions here, but it relates to this. From Dan, why do we wait for Bitcoin to hit 50K or 52K first to get in? Or do we wait for the pullback from that level to get in? I mean, from 46K to where we are now, if we can reach 52K. So that question basically relates to what I'm talking about here. The reason why we have to, or it's a conservative, or I should say a conservative strategy or conservative idea to wait, is because it proves that the structure is changing, when resistances are starting to break, okay? And by taking trades after that, you're now putting yourself on the side of the newer structure, which should be bullish, and you're increasing the chances that your trade goes green and continues green if the structure can maintain itself and work its way back up to something like 55K or 60K or low 60s or whatever, right? The next leg higher, if that leg could stay intact. Now, again, if we're in a wave 4, that leg could be a pain to sit through, but it's better than taking a bunch of trades here, getting stopped out a number of times, and then eventually catching the one that goes, or you may miss it because maybe it occurred while you were sleeping or whatever, and that's the problem with swing trading. So would you rather take a bunch of losses, which is what is likely to happen here? All right, I mentioned a trade a week before over here, and that basically got stopped out. Okay, barely, but I mean theoretically it got stopped out. So do you prefer to lose your money up front and then hope to make it back, which is a much tougher situation? Or would you rather wait, cost you nothing, okay, lose nothing, let the market run without you, which costs nothing, and then let it prove that it's strengthening? So now when you put your money at risk, there's a better chance it goes your way without having to take a series of losses first. It's a waste of energy and emotional energy, in my opinion, to go through all that and then possibly missing the move anyway. So another thing to consider, if you're not the patient type, okay, some people just don't have the patience, I understand, then you're probably better off being an investor, because you don't have to stick to such restrictions and there's no rules really as an investor. You're just managing your inventory by careful sizing. So you're always in the market, which also means you're also exposed to any unexpected adverse moves. Okay, that's the part that people don't like to hear. But what if Bitcoin goes to 20K? I mean, there's no way to know if it will, but what if it does? As an investor, you're going to be stuck in that. So the way to protect yourself in those situations is basically you're building a position a little at a time. And if there's a situation where it happens to have a dramatic pullback to levels that are unexpected, that becomes an opportunity for you, because now you can add more because you have the money sitting in your account waiting to be put in anyway, right? So now you're averaging in at much better prices. That's the inventory game. And you're always in the market, so you're not going to miss any moves. But if you get too big too fast, which is a common problem in that area, like, maybe you piled all in between 60K and 55K, now you're at the mercy of the market. So if the market goes to 20K, you're going to have emotional obstacles to get through, because it's when the market looks really bad that way, and everyone around you is saying that it's going to go to 10K, it's going to go to 0, blah, 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 it's going to scare you. You're going to scare yourself out of the position. And, the people that were waiting and patient and following their plan are going to be collecting your coins at really good prices, right? That's the part you want to avoid that. So those are the two areas that you have to consider. Do you want to play the investor game, or do you not have the patience to be a swing trader? You have to figure that part out. But swing trade requires a lot of patience. You have to wait for a lot of information to occur before risk makes sense. Right? Or you at least want to have the structure aligned more with, more favorable to you. You want to stack probabilities in your favor. And that's what you have to do. It's so hard. This game is hard because it's not a lack of skill. In fact, there's not much skill to this game. Okay? This game is highly random, which means people can make money with no skill. There's really no learning. You learn some basic things, right? You can learn how to interpret some charts and this and that. But the random element is what fools everyone. And you have to realize that the game overall, and everyone needs to understand this and internalize this, the game overall is not made to favor you or retail traders. The game is set up for everyone outside of that. Right? The game is set up for market makers, vendors, marketers, anyone else that looks to capitalize on the investors, right? That's who the game is set up for. It's in their favor. Forex dealers, exchanges, you name it, insiders, rich people, those kind of people. It's to their advantage, not yours. They need to profit from you. So you need to understand that everything in this game has been made to work against you. So in order to get around that, you have to have things, you really have to not act like everyone else, first of all, meaning stop reacting to information. You have to have rules that protect you from all these random things, because the random part is really what is going to rob you from your money. It's not like market makers make it random purposely. The market is just naturally random. It's efficient. And markets are not going to get less efficient. They're going to get more efficient. They're going to be harder. So this is like we're getting into the realm of algo traders and how they make money and stuff like that. It's a very hard game, and you have to be like a PhD in physics to compete in that game. There's a reason for that. And most of us are not that, okay? I'm not a PhD in anything, never mind physics. So, you have to find some other inefficiency or some other imbalance or some other type of situation to capitalize on, and it has to be clearly identified. If you're just like, oh, I'm just going to look at this chart and the chart's going to tell, no, that's just all nonsense. That's all just an illusion, okay? So anyway, that's my first rant for today. All right, let's move on here. I want to start answering some questions. So that's my Bitcoin situation, okay? So I'm basically looking for longs in this general area, but like I said, this aggressive and this conservative. I'm done with the aggressive because I tried one. It's not working. I don't like the structure. The structure is not favorable. So now there's no other choice but to wait for conservative. And that's it. This Bitcoin analysis, by the way, this Bitcoin evaluation is going to have an effect on all the garbage altcoins that follow it. Would you believe some of these YouTube monkeys actually still have the nerve to put out videos that say this altcoin is going to 50x by this time? Do you believe that? Someone put it in the chat room a few days ago. I couldn't believe it, that people still buy into that garbage. But hey, I guess that's, it's not a function. I always remind myself, it's not a function of intelligence. It's a function of emotion. And desperate and emotional people will bite on those videos because, hey, they're promising you're going to make $1 million or something, or you're going to turn your $100 investment into $20,000. I could sure use $20,000. I could pay this off. I could do that. I could do this. Right? You're desperate. So it's an emotional thing. Okay, and that's your biggest enemy in this game. You could make it an asset, or you could make it your friend if you know how to capitalize it when everyone else is acting that way. Right? That's the contrarian point of view. All right, so let's get to your questions before I'll rant for 3 hours. All right, Elizabeth, Ethereum. Okay, sure. So let's see. She always asks about Ethereum. I should have my Ethereum chart set up here. I should be prepared for that question. And let's see. I always have to spend like 3 hours looking for the chart. Okay, there it is. All right, now, so her question is 3,500 the idea entry? Or maybe she means ideal entry. So here's the thing. The general structure here, it's a broader higher low situation, right? Similar to Bitcoin, it's still, this is generally bullish. It's a higher low consolidation. We have this reference point back here, right? This level right here. What level is that? 3,900 is that level. Okay, that's the general area. As you can see, price is gyrating around that level. Okay, it's gyrating around there. So this thing is basically at support, like, similar to Bitcoin. So same concept. I would be anticipating longs. I would be looking for longs. Certainly wouldn't be looking to sell at these levels. Currently, you have a bullish pin bar, or even though the candle is red, the tail is long and it's on the bottom side, it's bullish. If that pin bar high is taken out, you will have a buy signal. Okay, but again, this thing is going to run into the same problem that Bitcoin has. And if Bitcoin can't get out of its own way, which it seems to be having a problem with, it doesn't matter how many buy signals you get here. These resistances, right, which Ethereum has, which will also be respected. And that's where the problem is. Okay, so with something like Ethereum, if you want to wait for 3,500, it also depends on if you're thinking of inventory or if you're thinking of swing trade. 3,500 here, I'm going to draw a line on 3,500. That's about right there, 3,500, right around there, right? 3,500, something like that. So that would actually, if Ethereum goes to 3,500, that would be a great spot for inventory for sure. I mean, great wholesale prices and extreme low. It would actually be extreme relative to this general structure up in here, right? That would be extreme, but it is a support level. So I think for inventory, it's a great idea. You want to buy some to hold on to, you're getting some good prices there. Of course, it can go lower, but those are pretty good, attractive prices at an attractive level. As far as swing trade goes, if it tests that price, that's not exactly good, because that will just be confirming that the momentum is bearish. And I would be expecting Bitcoin to be doing the same thing, okay? So what you want to see, so in your situation, Elizabeth, the situation would be like this. If you want to be aggressive, same story as Bitcoin. If you want to be aggressive, you wait for a failed low in this area, right, around that 3,500 area. I've talked about failed lows quite a few times in these streams. You should know what that is, right? You get the pin bar at the failed low, goes slightly lower, tricks everyone into thinking that it's a short, turns into a bullish pin bar. That's a buy signal, right? And because a lot of people are caught short in those situations, often you will get a squeeze, okay? And that's the long signal, and the squeeze is what you're looking for. But the thing is, how far does it go? There's no way to know. But this area, if you get into something like that, that would be like your profit target area. You're not looking for a huge move. You're just looking to take advantage of that squeeze, right? That would be the aggressive swing trade. Or you can wait, just like for Bitcoin, you can wait until these resistances get taken out, or they're no longer respected. So price needs to take out this high over here, right? Take it out and then retest, pull back a bit. That would be your ideal scenario for a swing trade long, with structure going your way. It's the more conservative thing to do, but again, it takes time. That type of scenario can take a week or two to unfold. Okay, so just something to keep in mind, especially with this holiday period that we're going into. These things may be slower. Okay, so that's Ethereum, and I'm willing to bet a lot of altcoins are going to show us a similar picture. So I see some people here have asked about other altcoins. We will see. All right, so anyway, thank you for asking. I hope that answers your question. Okay, hey Mustafa. All right, cool. Okay, good? I'm good. Thank you. GTR Euro. Please, for possible entry as a swing trade. Okay, let's take a look. GTR against EUR as a possible swing trade. GTR, did I put the symbol in wrong? EUR. Why am I not getting it? GTR. Oh wait, GTR EUR. I'm not getting anything for GTR. Let's see, what is GTR? Maybe it's this. Is it a stock? Is that a stock? Well, I'll find out. That must not. That's probably not it. Goodyear. It's probably not it. But so maybe you can clarify on what GTR EUR is, because I'm not getting a symbol for that. I'm not getting a coin anyway. GTR, or is it GRT? Let me see. GRT. Maybe it's GRT Euro. Let me see. Is that a coin? That's a coin. So maybe this is what you're talking about. I'm going to guess that you're talking about GRT. All right, so as far as a swing trade long, first thing I want to see is I want to take a look at the weekly chart and just get a sense of the bigger picture. And right, like this bigger picture is not exactly it's not a very pretty picture, all right? Because you have a lower high that was established. Actually, it's not a lower high, but it's a failed high that was established here, and which is relatively weak to Bitcoin, because when Bitcoin is making its all-time highs, this should have been much higher, right? That's the way I look at it, relative strength or relative weakness. Now, with that being said, you are at a support level. Let's take a look at the smaller time frame, right, the daily chart. And as far as a swing trade long, you have, I'll say you have the level of interest, okay? You have that. The buy signal actually went off a few days ago at this price here. What's this price? 54 cents basically, or almost 55 cents, right? This basically this inside bar high right there. So you're still within the range of the buy signal, all right? And your risk can be defined by this low. You have a common low over here. What is that low? 51 cents. You might as well give it some room. Say 50 cents even, or maybe 49.5 cents, something like that. And that would be where your risk is defined from. Now, again, most of these coins are going to be sensitive to Bitcoin, right? To different degrees. So if Bitcoin can't get its act together and it breaks that 45K support, no matter what kind of buy signal shows up here, most likely it will fail and break lower. So keep that in mind, right? We can have a million buy signals in the world. If Bitcoin fails, they're not going anywhere, most likely. It's better to assume that than not assume that, because most of these coins are not the exception, right? You get occasional coins here and there, but most of them follow. They do not lead, all right? So just another layer of risk to be cognizant of. So you have the buy signal. You can have your risk defined here. The next question is, where would you take profits? Now, if you don't want to use the chart for profit taking, then it's very simple. All you have to do is use the reward risk ratio. When you're at 1.5 to 1, you start taking money off the table. But if you want to use levels on the chart as far as potential targets, right, and then measure your reward risk off of that, and I think you should do a combination of both. It's wise to take something off the table, especially when you're going against a structure that's not in your favor. This is lower highs and lower lows. That's recent structure. So that can be a problem, okay? I would not be expecting enthusiastic, bullish momentum that's going to carry this thing to dramatic highs where, you know, you're going to be a millionaire next month type of thing, because the structure doesn't favor that at all. So if you manage to get a trade-off and, you know, you're risking, what would be the risk on this thing? 54 cents. So you're looking at maybe about, let's say 5 cents of risk, and you're up 5 cents in the trade, or maybe a little bit more than 5 cents. No matter what the price is, you should take something off the table, because this trade is working against you to begin with, okay? It's either that or, you know, your first resistance is going to be around this area right here, right? It's not going to be precise, but what is that? 63 and a quarter, around there. So if you're long from 50, 55, that's about 7 cents. That's more than 2 to 1. So if you can get the price, if the price can give you that opportunity, that's a great price to take something off the table as far as the swing trade. You will be beyond 1.5 to 1, obviously, right? So you should actually have something off the table earlier, and then maybe, you know, give it your more aggressive target would be up in here somewhere. Because again, I wouldn't have high expectations for something like this. You know, people make the mistake, they say, oh, look, you know, this thing was all the way up here. So, you know, if it could go over here, yeah, that'll be a great trade. It's possible it can get there, but the chances are low. You have to look at the probabilities. Probabilities are something you cannot see. You know, we can't, it'd be nice if I could put a precise number and say, there's a 70% chance of this or the 65% chance of that, but I can't. So I have to basically work with a loose probability and say, well, if it has to work harder, there's probably less of a chance that it's going to get there, okay, in this environment, because we are not in the environment that we were in a couple of months ago, where every altcoin was going berserk and blah, blah, blah. There was a reason for that. You had marketing teams heavily pushing these coins. You had fake gurus getting paid. They're probably still getting paid, but getting paid enormous amounts of money to push coins on their large followings. That's going to drive the coins, right? The coins are not moving on their own fundamental value. They're moving on hype. So once people realize these things are junk, once they realize that, that momentum is not going to be there, because no one's going to be buying them, right? Even if these fake gurus start coming out and pumping hard again, a lot of people that are stuck in these things are going to be like, man, I just got cut by 50%. I'm not, you know, they're going to lose faith, right? They're not going to be so blind to it the second time around. So you need a new batch of investors who haven't experienced that yet, right? And that's the next cycle, whenever that is, right? You have your new, maybe they're in high school right now. Maybe, you know, they know nothing about this market except some people made a lost money, whatever. and they come into it all, naive and whatever, and they'll buy into anything. That's your next leg higher, right? You need uninformed, emotional, mindless people to do that. I mean, I know those are bad words to say. We've all been there, but that's what drives a market, okay? And fake gurus and marketing teams have really capitalized on that mindlessness and that herd mentality of this previous cycle. Because some of these coins, it's like, man, it's ridiculous. But if you think about it, think about this. Think about this whole game as just one big casino, because that is what it is, especially in the altcoin world. These are not investment grade instruments. They are not. They are highly speculative. So we all should know this, right? I like these clowns who say, this coin here is a blue chip of the blue chip. Blue chip is a stock, you moron. Blue chip is not an altcoin. You should never call an altcoin a blue chip. Okay? A blue chip is IBM. A blue chip is Walmart or something like that. Goldman Sachs, it's a blue chip. It's an old stock, whatever. They've been around forever. They dominate their business, blah, blah, blah. That's a blue chip. Not some garbage altcoin that some programmers made up to get rich. That's not a blue chip, right? Anyway, my point is, think of this as a big casino. Now, what do casinos do to get people to come into those places? They create hope. How do they do that? Well, you have occasional winners, right? You have people, they're playing some table game, they win it big. They're playing the slot machine, they win it big. So when you go, you're like, I may have that streak, that winning streak, and I may come out ahead, right? So it's exciting and it draws you in. If you knew for sure that there was no chance of you winning at all because no one ever won anything at a casino, you would not go there and donate your money. Okay, so the market works the same way. They create all this hope. And fake gurus, whether they know this or not, that's what they push, hope. Hope keeps you coming back. Okay, until you get wiped out and you say, and then you have like a bad taste in your mouth. I'm not going to do that again. And that's that. Okay, and then someone else will replace you. So think about how a casino operates. And I believe, I don't know for sure, but I believe that they control the frequency of these random winnings, right? They can make it easier to win or harder to win. And obviously, when it's easier to win, it's going to cost them more, but that's a cost of doing business because they're going to bring in more players, and more players means more money for them, right? Think of it that way, especially in the altcoin space. Okay, especially. All right, so that's that rant, my casino rant. All right, so let's talk about some other coins here. So thank you for asking about GRT. I hope that's the correct one. Yeah, okay. So X, all right, so I answered that question. I hope that was a good answer for you. Eligius, all right, greetings from Lithuania. Welcome, it's always good to see you. Thoughts on Baba stock? Little bit to wait in May. Okay, so Baba, let's take a look. Now, I believe Baba is Alibaba, and I believe this is like all part of the Chinese situation, right? Like this is one of the Chinese stocks. It gets affected by any type of news that's about the Chinese situation, so or trade situation. Now here's the thing. Just looking at the bigger picture here. Here's the weekly. So yeah, Baba is certainly at it's below, look at that, what is that, the 2019 low? That's pretty significant, right? There's probably a lot of people stuck in this one, thinking that this thing was going to bounce. Look at all these attempted bounces. Look at these, this is a good lesson, right, as far as like what's going on with Bitcoin. Look at all of these bounces in Baba, okay? These are weekly bounces. So they probably sucked in a lot of people thinking, I got the bottom, yeah, right, I got the best price. And then they got stuck in this thing, because this thing got hammered. No one probably saw this coming. Again, it probably has something to do with stuff that's going on in China. Now, here's the thing. This structure is lower highs and lower lows. So you are going against the structure. So yeah, it is early. As far as like swing trades go, I would not be very enthusiastic about something like this. Also, you have to keep in mind, when you're talking about stocks in general, whether it's Chinese stocks or not, you have to look at the general stock market and things like the S&P. So we'll compare that to the S&P here in a moment, because if the general stock market gets hammered, even if the stock is not highly correlated, it probably won't really go anywhere or be negatively affected unless there's some very, very specific positive news on the stock, right? So you have to believe that if there's like a general sell-off, it will probably affect your stock in an adverse way, right? Maybe not a dramatic way, but it means your stock is probably not going to go anywhere, right? Now, with that being said, as far as BABA goes, technically, yeah, you're at that level right now, right? You have to look at the initial push. You have the initial push. This could turn into a higher low, but there's nothing there yet. I mean, you have a red candle today. This thing's about to close. Certainly not definitely not a good choice for a swing trade right now. I'd like to see a bullish pin bar or something off this level. Right now, all this thing is saying is we have a lower high, and it's reasonable to expect a lower low. That's what the chart is saying. All right, so a lower low would be here. What is that? 113 area. So you're getting near like the 100 area. That's probably going to be an important whole number, the 100 area. So I would wait for this thing to stabilize, if anything, if you're talking about swing trades. If you're talking about like investment, I don't know. You know, I know they were like a big deal at one time. I don't know what their story is as far as like why this thing would be an investment grade stock. I mean, I'm not familiar enough with their fundamentals, so I can't really say much about that. But if you're looking to buy inventory, I mean, you're near a low, but this thing is poised to go lower. So if anything, you know, you go light, right? And then see if this thing can give you the better prices. But if you're talking about swing trade, then you're looking for a double bottom, and that would be aggressive because, again, you're going against the structure. The conservative thing to do, just like Bitcoin, the conservative thing to do, let price take out this resistance first. Okay, let it do what it has to do, put in the failed low, gyrate around, work its way higher, break the resistance. When it does that, it's telling you that the structure is changing and that momentum may be turning bullish, right? And now taking trades at that point, at least you have that factor on your side. Because right now it's against you. It's working against you, okay? One area also to watch for, if you do get into a trade somewhere between here and like that resistance break, would be this gap right here. Gaps tend to act as support or resistance levels. So this could be a good profit target for a swing trade, or at least one, you know, one profit target, something like that. Something to keep in mind. Also, a bad place to be buying, right? You don't want to be buying inside that gap because that's a great place for people to sell. That's typically how they act, all right? So something to keep in mind. So that's what I have to say about BABA. So it's certainly early. And if you go for the double bottom, which is a possible scenario, keep in mind it's aggressive and you want to be very quick as far as taking money off the table when reward risk goes your way. Don't sit in this thing thinking, oh, this thing is going to go back up to, you know, $200 now. That would be unreasonable. All right. So if you're at 1.5 to 1, 2 to 1 reward risk, certainly be happy to take something off the table. And if you want to try to let a small portion ride, you know, you can try that and see if it makes it up to that gap. That's basically the scenarios that are within this structure right now. Does that make sense? So thank you for asking about BABA. And it's a good question. Hey, James from London. Okay, Aussie, sure. Let's take a look at Aussie Dollar. So, you know, Aussie Dollar a lot of times is affected by things like oil and gold. Oil got hammered recently. I mean, a pretty big move in oil. So I'm not surprised to see Aussie selling off here a bit. Now, let's take a look at the bigger picture. I want to start out with the weekly chart just to get a sense of something. I have an old trade on this chart, obviously. Now, bigger picture on the Aussie, you have a failed low on the weekly, okay? Get this big green candle where it tried to make that lower low and it failed to go much lower. And you had that sharp reversal off of an area that is basically a potential support, right? That area right there. So that you have that going for you. As far as the broader structure is concerned, I mean, you're in sort of this corrective structure. I mean, look at this higher low, made the higher high and gave it all back. Again, you're going to have, when it comes to like something like the Aussie, there's lots of factors that can affect this thing. So generally speaking, we can argue that this is a broader, higher low. So expecting higher prices soon is within reason, especially because we have this bullish pin, this bullish out sort of an outside bar intact, right? It's established. So that kind of gives us some short-term outlook. Now, after that though, we have this bearish weekly pin bar and it took out the low, which means there's no follow through on that momentum. All right, now let's go to the smaller time frame. So we can see here, as far as for a swing trade long, here's how I would characterize this. You have the initial move, right? That's this right here. That's the initial move. So after the initial move, now you want to see if you can get the higher low or the double bottom in this region. That would probably be the better thing to do. Now the structure, arguing about the structure here, it's conflicted because where are my resistances? Well, I have this new resistance that was just established, right? And that actually goes back to this old support here. So that makes sense, right? Old support becomes new resistance. What other resistances do I have? You have this one here, basically, somewhere in this area. So those are the resistances you want to see break if this thing is going to be bullish, right? So here's the way to treat something like this. At this time, you know, we have to, I think it's better to judge this as a lower high, okay, at this time until it proves otherwise, even though it's in an area where the structure is likely to change, right? Failed low on the weekly and all that other stuff. It needs to prove it. So until it proves it, I would say you're better off assuming that this is a lower high and a lower low is coming next, okay? Now, what you're anticipating, what you're looking for is a failed low or a higher low in this area. So you want to see a higher low develop right there, okay? Or you want to see a failed low develop right here. Those will be long opportunities for swing trades, both of those opportunities, if you can get the reversal candles in one of these areas. Now, if you get that and you go for the long, then you need this resistance to break, okay? If the resistance doesn't break, then you're probably in a consolidation. So that's where you have to make adjustment. You know, sometimes we get these trade signals and we think, okay, I got the signal. Now I'm expecting a new trend to go my way. A trend may not develop. You may be in a consolidation, okay? And if that's the case, then you want to, if you have a nice little profit in there, you definitely should take something off the table if it cannot take out that resistance. That resistance needs to be cleared before we could say we have a new bullish leg in play. All right, so you could take advantage of that by getting into the higher low or the double bottom, but just realize what can go wrong. That's the thing, that's the main thing, because you're still fighting the structure, all right? It's not, you know, taking aggressive trades is not a bad thing. It's not a wrong thing to do. You just have to be more sensitive to the changes that the market will give you. Like I said in a previous stream, and analyzing a market and trading a market are two separate things, okay? They're two separate thought processes, if you want to call it that. When you're analyzing a market, you're looking for levels, you're looking for structure, and you're coming up with scenarios. Okay, I want to see this, and if I see this, then this is what should happen next, okay, based on, you know, the structure that's here. So you're coming up with scenarios, and you're preparing in advance before the market shows you that look that you're preparing for. That's analysis, okay? And the market may prove that analysis wrong, may negate the analysis, the structure or the confirmation may never appear, and you never had a trade. Okay, cool, no problem, right? The analysis has done its job. It kept you out of a bad trade. But sometimes you will get the confirmation and all that, and now you have a trade, right? Now you have risk. The way you manage risk is not the same as the process that you go through for analysis. And managing risk is about adjusting to new information constantly and understanding what wrong looks like. It's a good way to put it, okay? What does wrong look like? And if wrong shows up, you have to do something. Or you have your stop in place and you just let it go to the stop and that's that. But there are many times when you could make an adjustment earlier and take a smaller loss. Or maybe you have a small gain and you're like, you know, this thing is not looking so good. I'm going to get out and take my small gain because you realize that the momentum that should be there is not there. And that's the case often when you're in these consolidations. Okay, this is not a consolidation yet, but it can turn into one. All right, does that all make sense? So I hope that answers your question about Aussie dollar. Also, keep something in mind, the factors, right, that affect this thing, right? Oil is a factor. Also, keep an eye on the dollar index. Look at the dollar index. Always take a look at the dollar index. When you're dealing with Forex pairs or something like oil or gold, make sure to check this. This is like your S&P, okay, that you have to compare to. Make sure you check this. The dollar index the other day on Friday gave us this broad bullish candle, right? That outside bar basically. Today hasn't done much, but we're fooling around this range high. Now let me ask you all a question about this dollar chart. Many of you know the answer because I talk about it all the time. But what does this chart look like? It's in a trend to you? I mean, and if it looks like it's in a trend, what would you say? Which way is this thing going? Which way would you say the dollar is going? Higher or lower? What would you say? All right, so you can put that in the chat now. It's my interactive question for the day. Which way do you think the dollar is going? Now, this dollar, right, while you're putting that answer in, I'm going to tell you, this dollar is poised to go higher. So if the dollar is going higher, that puts that's a negative effect on all these things that trade against the dollar, right? That's why people keep asking about gold. I'm like, I have no interest in gold as long as the dollar looks like this, because the dollar is going to win out every time, and gold may have these little pop-ups and these little minor moves that lure people in because, oh, gold, something's going on in gold. Elon Musk is going to buy gold or something. He tweeted about gold. You know, some nonsense comes out. It gets people long gold, and there's no reason to buy gold. Okay, here come the answers. Higher. See, look, dollar, higher. Dollar's higher. I mean, that's what it looks like it's poised to do. Now, if you're not sure about the dollar and you want to have some more confirmation, take a look at the bond market, right? 10-year note. Now, the 10-year note is like watching paint dry. This thing is a very slow mover. And any type of eventful market or price action is very slow. But look at this. We have a bearish pin bar here today. I guess that's today's candle. And that doesn't really mean anything in the grand scheme of things. But what I'm watching for on the bond market is that level right there. If we take out that level, and the dollar is saying right now, the dollar chart is saying that the bonds are going to take out that level. Because if the dollar breaks out higher, that means yields are rising. And if yields are rising, that means bond prices must be going lower because it's an inverse relationship, right? So I would be expecting that bond, that low, to be taken out. If that low is taken out, we're in a rising rate environment, pretty much, right? And that's going to be bearish for everything that trades against the dollar. And it can also have a negative effect on the stock market. That's why I'm so completely staying away from stocks in this situation, because this is not a bullish situation. All right, and it takes time to play out. This bond market may take another month to do that, what I just described. So you have to understand that. Okay, anyway, so I hope that answers your question. Let's move on here. Okay, SOL, if it's not too much of a Bitcoin USD copycat. Okay, so SOL is one of those coins that tends to do its own thing, right? Because, and I say that it's because of the level of hype that's come out on this thing, right? But anyway, none of that matters, right? That's just an opinion. The general chart is bullish, okay? And it is a strong looking chart. It looks better than a lot of these other charts. This looks a lot better than GRT, all right? It's higher lows and higher highs. Now, here's the thing. Recent price action is still bearish, right? Lower highs and low. So you have this corrective movement. And the corrective movement has found a support in this area right here. So here's the thing. Can SOL establish the higher low or the double bottom, right? Just like Bitcoin, can it do it in this area? And if it does, can it then take out this resistance? That's what it needs to do to prove that this corrective structure is no longer in play. And if you're buying it, then you're buying into a bullish structure at that point, right? You're buying into you're buying into the structure that's aligned with the broader trend. The broader trend on this thing is bullish. So it's in something like this, because the chart is so good looking, wouldn't hurt to be more aggressive. I can understand if you want to be more aggressive with this, because when that trend comes back, this thing is likely to at least test the higher part of the range, because that's what the general structure says about this thing, right? I mean, that area up there is within reason. Now, of course, I would be expecting Bitcoin to at least be doing something positive, right? Bitcoin doesn't need to be at its highs, right? We don't need to see 70K, but I would be expecting Bitcoin to at least be challenging its structure or taking out a resistance or something bullish. And this thing, since it's outperforming or it's acting relatively strong, I would anticipate that this thing could reasonably get back into this area up in here, right? And that's where your profit targets should be planned, somewhere in there. So right now, what you're waiting for on something like this would be the buy signal. Now, at this moment, you have a bullish pin bar. It's not closed yet, but if you get the high this is taken out, 181, basically we could say 181 and a quarter, round it to 181 and a half. You take that out, you have the buy signal, all right? And then you will need follow through. That follow through will have to clear this resistance. If it can't clear the resistance, then you have an adjustment to make, or you have your stop somewhere below that low. What is that? So 168 is the low. You're looking at like a good 20 points, 25 points of risk, something like that. And that's just based on the candle low, not the structural low, which is much lower. So that's an aggressive trade. That's one possible idea. If this thing manages to test this low here, this range low, 149, 150, that's the ideal area for a double bottom. And since this corrective structure is just correcting a broader bullish trend, this, I'd say, would be your highest probability area for the reversal, if it can offer that. It may not get there, okay? But if it does and reverses, that may give you a nice swing trade opportunity as well. Again, aggressive, because at that point, if it goes from here to there, that's possibly a lower high going to a lower low, possibly. If it fails, then sure, you have the double bottom, but you're still going against the bearish structure, okay? So that's why in those situations, I think it pays to have lower expectations. So if you get into a trade like that, make sure that your profit targets are more conservative. So expect less, but at least be making 1.5 to 1 or at least 1 to 1 in your trade. But expecting 4 to 1 or 5 to 1 would be unreasonable in that scenario until your structure changes. Now, you may be in a situation where you manage to get into that aggressive trade and you hold on to some of it, and the structure happens to change in the process. Well, then that's a new piece of information. At that point, you can adjust from being conservative to more aggressive with your targets. Does that make sense? Again, that's the trade mindset, right? That's really no longer the analytical mindset. That's more of the trade mindset. That makes sense. All right, so that's SOL. Not a bad looking chart. It's just there's no buy signal in there yet, but you may get one soon. Okay, so definitely prepare for that. And do not forget the free rants. Yep, I'm trying to get them in there. Sometimes I'm low on rants. Would you believe that? I haven't watched enough YouTube videos to get angry about that. That's what it is. I have to watch more YouTube videos. Okay, so let's see, Peter. Cardano, sure. Well, all right, so I see Peter says, and don't get mad about Cardano. I don't get mad about Cardano, but the reason why I give this thing such a hard time is because I've seen so much hype and so much optimism, okay? And it bothers me that they've lured in so many people, because this thing was like a sure thing, all right? You're going to be a millionaire, and look at this thing, okay? So that's why whenever I see those type of heavily hyped things, I think the opposite. The more hype that is in there, the less value the thing has, right? That's the way I like to think of it. And things that are not talked about, things that are very quiet, things that whatever, those are usually like where there's opportunity, because no one knows about them, right? That's really, and it's very hard to find those. And sometimes a lot of things that aren't talked about are garbage, right? So when you're playing the altcoin game, there's no way to know, unless you're an insider, unless you're the guy that made the coin and you're going to produce the hype on the coin, then you know what's going to happen, right? So anyway, let's talk about the technicals here. Cardano is inside of this buy zone, right? This is a buy zone. Right? Those two lines that I have on the chart represent a support area, just like Bitcoin. It's the same deal, okay? Now, inside of that zone, you could see prices gyrating, just like Bitcoin, and we keep getting this common support off of this level here. What level is that? That is the low one. Oh, so basically 120, right? We're going to round that to 120, the 120 area. This thing right now is at 125. So we'll say there's a common support around 120. Now the thing is, just like those other coins, as I suspected from before, these resistances, they're minor, but they're being respected. So we have to assume that this structure is going to stay intact until it proves otherwise. So if you're interested in Cardano for a swing trade, I really think it pays to wait for the resistance to break. It's the same story as Bitcoin and Ethereum and those other coins we talked about. Let it break first, let it pull back, or if you want to take the break and hope for the best, I mean, you could do that too. Maybe you don't have the patience for the pullback, or maybe it doesn't pull back after it breaks. Maybe it breaks, okay, and then it barely pulls back. Maybe it gives you like a little tiny candle, and then it goes from there. Right? That's possible. So you want to go for the breakout. Again, it's aggressive, but it's up to you on how you want to handle that, because if it fakes out again, you're stuck in it, and you're going to take a larger loss. So that's, you have to decide if that's right for you or not. But I think the more conservative thing to do is let it break that resistance, find the next higher low, measure your risk from there, and hopefully if that higher low sticks, then the next leg from there should be a higher high, and you're back into a bullish structure. We don't have that anywhere, right? Because again, all these things are following each other. And until Bitcoin does it, or, never mind Bitcoin, you just take a look at this thing, total, okay? Look at this thing. So this is the total market cap of this entire garbage space. And look, it's trying to hold. It's consolidating off of a higher low. So if that thing turns, if the structure changes there, then you're probably going to see that money start flowing back in. But keep in mind, if it fakes out and it breaks the support, then it's probably not going to be pretty. And the reason for that is there's a lot of people stuck in these things. All right, all these people that got stuck in, they got sucked in at these highs, listening to all these clowns on YouTube and everywhere else. You have a lot of people now that are stuck and uncomfortable, okay? And the market hasn't even fully pulled back yet. Right now, they're depending on hope. That's hope, okay? I hope it's at the bottom, it returns, and blah, blah, blah. It's hope. And maybe it'll work out. Right, that would be the market being generous and just giving you a reward for hoping. It's very easy, and you don't have to take any responsibility for it, right? I hope, and if it doesn't work, I'm going to blame someone else, okay? But that's hope. It's out of your hands, okay? You have no control over it. It's hope. So that's what you have to watch for. If this thing breaks those supports, right, this total chart here breaks those supports, then the party is probably over for a little while longer, which is that's what I suspect. Especially, there was those congressional hearings like 2 weeks ago. I didn't watch them, but if the politicians are getting interested in regulating is never a bullish thing. Okay, so just so you know, they start pushing regulations on these things, they start regulating exchanges or whatever, that's probably going to generally put bearish pressure on these things, not bullish pressure. Especially if they start, doing something about all these fake gurus that get these herds going, because that's where all this movement is coming from. That's where a lot of this money is coming from. All right, so I didn't get mad. Okay, hey Schwartz. Okay, what do you think of BTC? Okay, Luna. All right, so let's take a look at Luna real quick. So, this is what I mean, right? This is a nice example of hype. Someone asked about Luna not too long ago, and the chart is good looking, but you got to be nuts buying this breakout, all right? Anyone that's interested in this breakout, I suspect that this is a result of hype. It's definitely a good looking chart. I see higher lows and higher highs, but you're at the highest high. So this is highly risky, as we know. It's highly vulnerable. How many charts have we seen that looked like this a month and a half ago, and then, you know, have given back 30 or 40 or 50% or something like that since then? That's what this is in the position of doing. So anyone that buys this now has not learned their lesson. All right? And here's what you need to understand. There will be some people that will buy something dumb like this, because this is dumb. They will buy something dumb like this. They will make money, and they will think, oh, that was easy. But that behavior, even though they won this one time, is the same thing as going to a casino and winning that one time, and then thinking, every time I go to a casino, I'm likely to win. No. Okay, there's no skill in this. So when you play that way and you win that way, you will also give it back the same way. That's what is so wrong with that. It reinforces the wrong behavior. So for something like Luna, you should be waiting for a support, and this thing is nowhere near supports. So that's all I could say about that, but it's definitely a good looking chart. I suspect also when the money really comes out of the space, like if Bitcoin breaks hard and everything breaks hard, this thing is not going to go much further anyway, right? It'll be affected like the rest of them. So I don't know, that's just an opinion, but all I know is I don't buy highs, especially when they look like that. So thanks for bringing that one up. So as far as Bitcoin going lower, I talked about that. It's anything is possible. It's fighting to hold that 45K support. If it breaks that support, you're looking at 42K, a test of 42K. If 42K breaks, you're looking at like 35 or 36 or somewhere like that, you know, mid to high 30s, if those supports break. But there's probably going to be a fight at the 42K area because there was such a dramatic bounce off of that level initially. Does that make sense? Okay. So let me see. I'm just going through the chat here. Thanks for asking. Winter Fresh from Romania also. Okay, REEF. Let's see. USDT. Let's take a look. All right, so let's look back here a bit. Let's take a look at the weekly chart. First thing I want to do, because I want to get a sense of that bigger picture. All right, so this is kind of like one of those coins that we looked at earlier. It's got the failed high, right? So we are at supports. There's going to be some room here for aggressive trades, right? Just like I described earlier, because you are at supports. This is not like Luna. Luna is at a resistance or near resistance at those highs, right? Luna is a bad place to buy. That's like buying here. And this is where Luna is going to go. It's going to do the same thing. All these things do the same thing. So you're the opposite, okay? This is an area potentially to go long. Now let's take a look at the price action. So it looks similar to Bitcoin where you have all these little failed lows, like it's trying to break lower and it's not going lower. You have this green candle. It's not an outside bar, but it's almost an outside bar. It's definitely a bullish type of reversal. And it took out these resistances, these minor resistances. Took them right out, right? These little highs over here, took them out. That's what you want to see. That's a good sign. That's a good start for a change, right? That says something, because resistances are not supposed to break if this structure is going to stay intact. So you have that going for you. Now, right currently, you have an inside bar. The current candle is an inside bar. So you can view this as a potential buy signal. If this candle high is taken out tomorrow, which is what? 0204. So basically 2 cents. That's taken out. You have a buy signal. Risk should probably be defined by this low here, not the candle low, because these things are too cheap. 0116. So basically just like 1.25 cents, you want to call it, something like that. That's what you're looking at as far as risk. So this thing should not go below that low. If it goes below that low, you should take the loss. As far as if this thing's going to put a bullish leg together, you want to look at the resistance levels, right? So you have another resistance there, which it almost touched. You have one here. So those are potential price targets, right? Or this zone would be a good area to be considering profit taking if you're long. So that should be greater than 1-to-1. If you're risking, you know, what was the high here again? 02, so 2 cents. So almost, you're risking almost 1 cent. So up in this area, you're making what, 202, 230. What's this high over here? 265. So you're not even at 3 cents though. You know, you should be much higher. Let's see, where is 3 cents? 3 cents is all the way up here. Yeah, 3 cents is like all the way over here in this area. So ideally, you want to get price up in this area, okay? Ideally, to cover the risk that you have to take. Or you're going to have to use a tighter stop. But that's the thing I don't like about these really cheap coins. They can be very noisy in that way, right? And that could be tough to work with sometimes. But that's what I have to say about it. It's in a location for a long. You just need some of that follow through there, okay? And if you don't get the follow through, that's where you have to make adjustments. And it needs to take out that candle high. Right now, it's obviously not at the candle high, so you have to wait for this candle to close and the high to be taken out, and then you have yourself a buy signal. And then you have to see, if you take it, you have to decide, you know, you have to watch it and see where it goes. And if it fails sooner, then you should make your adjustments, or you should do something, whether it's tightening your stop or whatever, like I described earlier. Okay, so I hope that answers your question about Reef. But I mean, comparing charts, Solana is a much better looking chart, or Luna is a much better looking chart than something like Reef. It's just that Reef is in a better location, okay? And it's not as conflicted as some of these other coins. But here's the thing. Like I said before, if Bitcoin fails, it doesn't matter how we slice these buy signals. If Bitcoin fails, they're all probably going to fail too. Or there's going to be bearish pressure on them. So you have to keep that in mind. These are not like stocks that trade on their own, okay? So thanks for asking. Hey, Monica from Montreux, Switzerland. Hey, welcome. Welcome. I think I've seen you here before. Thank you for stopping by from Switzerland. We got Kim from Argentina. Hey, Kim. Good to see you. All right. Please take a look at AAVE and YFI. Okay, let's see what I can take a look. Oh, I see. Do we have Michelle here from Italy? Buonasera. Oh, buongiorno. She likes the way I say that. It's the only thing I could say in Italian. I know some bad words, but I'm not going to say those. All right, so let's take a look at AAVE, USD. All right, so I know more Spanish than I do Italian, although, you know, I am half Italian. I should be speaking Italian. All right, let's see what we have here. AAVE. Let's take a look at the weekly chart. I mean, I look at these weekly charts. If you notice, I'm spending more time looking at these weekly charts because I need to get a quick sense of perspective, or where we are on the roadmap. So here we are. We have this nice support area here. Okay, you're at a potential double bottom. This entire structure, from this low going all the way up here, I mean, we can argue that that's a consolidation. Okay, a very broad, higher low consolidation. We can make that argument. Okay. Now, the recent momentum, though, this right here is bearish. You have a lower high, and it's bearish, and it took you to this low. So that's a factor. You have to keep that in mind, because that can affect things going forward. Now, here's the daily chart. So as far as a swing trade long, look, this thing is, there is some room for aggressive trades here. That was one resistance right there, and you have another one right here. It's trying to take them out. It took out the first one, but that's a minor one. Tried to take this one out. Okay, it's trying, so that's a start. You have a lot of price overlap in this area, meaning it keeps trying to push lower, comes right back up, right? There's no bearish follow through. So there's some potential change taking place there. On top of all that, you have today's current candle. Look at that candle. That's a nice looking candle. That's a bullish pin bar and a higher low. Okay, nice higher low. This is what you want to see, like on Bitcoin. This is what you want to see on Ethereum. Like that's what you want to see. That's the setup that you want to see. Now, as far as actually buying this thing, you need to wait for the high of this pin bar to be taken out, which is 186.39. If you give it a little room, maybe 186.50, maybe 187, something like that. But the high needs to be taken out. That becomes your buy signal. You can define your risk by this low, okay, the pin bar low, because I mean this thing is priced pretty high, so there's no need to use the full structure. I think the pin bar is appropriate. 167.42. So you're looking at basically about 20 points of risk on something like that, which means you need to make 20 points to justify this thing, right? can you make 20 points on this? Let's see. Look, this high over here is 204, and you'd be buying it. So yeah, that's almost 20 points there, right? That's just short of 20 points. So a little bit higher. It'd have to go a little bit higher than that, and you would be justifying your risk, right? Somewhere in this area, because it'd have to go to 207. If you're buying it at 187, it'd have to go to 207 to be at 1-to-1 reward risk, right? And that's the first place you should be taking something off the table. Does that make sense? So it's a nice idea. It's not as aggressive, right? You have more of an ideal setup here compared to some of these other charts we looked at, especially things like Bitcoin, right? So that tells us something, that maybe they're acting relatively strong to Bitcoin. But like I said, if Bitcoin gives up and fails, then we're getting these buy signals aren't going to be that meaningful, because they're not going to hold up. So just something to keep in mind. It doesn't mean don't take them. It just means understand what the limitations are and understand what can go wrong. Because maybe Bitcoin runs up a few points. Maybe Bitcoin runs back up to 48 or 49K again, and it gives this thing the boost that it needs for you to reach 1-to-1 or slightly more. I think it would be wise to keep your expectations limited too, because you are, even though the structure is trying to change, you do have this entire set of resistance areas right here that it has to get through. So I wouldn't be overly aggressive with the price targets. Does that make sense? So you have a possibility here. Just understand what can go wrong, and if it goes wrong, it's a good idea to respect the loss, take the stops, take the loss, and be done with it, because you don't want to get caught in a support break if these things all break their supports. You don't want to get caught in that. All right, so YFI. All right, I'll take a look. What about strong? So we talked about Luna. Well, strong contrarian. If you mean short, I wouldn't short it. I wouldn't short it, because the reason is you may get that contrarian move, but if the herd is out of control, which it's going to be a function of how well they're doing their marketing or whatever is going on, there's no way to know where that thing is going to peak, right? That thing may run another 50 points before it peaks. I mean, there's no way to know. So it's playing a random game. You can't step in front. Like, being a contrarian first is thinking the opposite way, which is fine, but then you need something to confirm that the lack of buying, or the buying is being absorbed, right? And there's nothing there yet. So all you'd be doing is stepping in front of it. And that's a very, very tough game to play. Okay, it's usually not a good idea. So if you're going to play that game, it really pays to wait for more confirmation. Okay, so let me just run through these. What I'm going to do here is just run through these questions real quick, because I got to wrap this up here in a couple of minutes. I know I have to cut this a little short today, but let me just see what I can get through here, and then I will do that. So YFI. All right, let me see if I can run through that real quick. YFI USD. Let's take a look. What is this thing? Oh, look at that. That's an interesting move. All right, so first thing I want to see is the weekly. All right, so this thing obviously is being driven by some kind of news, right? Clearly there's news. You're in this resistance area right now. So if you're not in this, you missed it. That's the first thing, okay? Don't chase this thing, because this is hype. And buying this thing now, all you're doing is letting people out that bought it early. And in this game, especially with these altcoins, inside information is perfectly legal, okay? Insider trading, you ever hear that? Putting on positions with inside information is illegal in the stock market, unless you're a politician, of course. But if you're not a politician, it's illegal. But in the Bitcoin world, it's not illegal. So a lot of these moves, people that are buying it here, they know something before everyone else, okay? When the move occurs like this, and then you buy it because it looks good, you're just basically making them rich, right? That's, like I always said before, that's our primary purpose in this game, is to make others rich. That's exactly what you'd be doing there. So I wouldn't go near this thing, first of all. It's a nice, interesting move. And Michelle, talking about contrarian move, this is much more ripe for a contrarian move compared to something like Luna, because this thing's in a range. It's in a consolidation, and it basically went in a straight line from the low of the range to the high of the range, right? So if you want to step in front of something, this thing is more likely to turn around at a more predictable level. There's no guarantee that it will, but there's more of a chance it turns around in that area compared to something like Luna, where it's completely random, where it turns around. Okay, so something to keep in mind. But again, you always want to wait for some sort of confirmation. There's no reason to sell this thing right now. There's also no reason to buy it. Does that all make sense? So thank you for bringing this one up, because I wasn't watching this one. It's a very interesting move, but nothing to do here. If you want to get long at some point, let the thing pull back, let it find a support. That's the best thing to do. Also, another exercise, something that you may want to consider to do, is when you catch a coin, when you spot a coin that does something like this, okay, look up the news, whatever it is, find out what the news is, and then somewhere in your notes, mark this peak, right? Mark the whatever the news is, and then put it on your chart or put it in a notebook somewhere, so you know, oh, this thing ran on this particular news, and then see where it is in a month, okay? Or see where it is in a couple of weeks. Is it generally higher, or is it generally lower? All right, you're probably going to find, like this situation here, look at this. What do you think this was on, right? Some kind of news, and look where it went in a few days, a couple of weeks, right? So that's a nice little exercise to do. Note the news or the catalyst that drove this thing, and then see where it is in a couple of weeks. It might open your eyes to a few things in this particular space. Again, I'm very hard on these altcoins because I know that they're just basically vehicles to rob the herd, or rob retail investors. That's what they are. And the only people that are getting rich are, I always tell people, you want to get rich with altcoins? Make your own altcoin and market it, and then when the herd comes to buy it, you sell it to them, you'll be rich. Or become a fake guru, get a big following, and then charge $25,000 to promote altcoins to everyone else. You'll get rich, right? And to be a fake guru is very easy. All you have to do is say a few fancy words, put a bunch of things on your charts, make it look like you know what you're talking about, and that's it. And be a good marketer. Anyone can be a fake guru. There's no skill involved, right? And it doesn't really cost you anything either, just some time. So become a fake guru, push altcoins on people, right? You get your big following, and then you can charge $25,000 to talk about an altcoin for 3 minutes. That's how you get rich with altcoins, not investing in them, okay? Most of these fake gurus don't trade these or invest in these things. That's for the retailers to do, to make others rich. I know I'm very skeptical. I'm sure I depressed some people with this, or it's so negative. But you have to understand, the game is made this way, right? Where it's made so that we don't win. So it pays to be skeptical. Anyway, all right, enough of that rant. YFI. So thank you for bringing up YFI. All right, so Michelle, so we talked about Luna. Have you a stock to suggest to us there's a bearish period? So, all right, that's an interesting thing you bring up, Michelle. When we talk about stocks, and I haven't brought up this chart yet, we need to look at this chart right here. This is the S&P 500, okay? No one asks me about this chart. This is one of the most important charts, besides the bonds and the dollar. This is like the next most important chart you should be looking at. This is the S&P going back a year or two, okay? Does this chart look like it's at a bottom to you? No. All right, this thing is coming off of an all-time high right here. See that? And this is after all that FOMC nonsense and all the other optimistic nonsense and more nonsense that comes out of this government with stimulus and blah, 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 right? The party is over, in my opinion, because they start with the raising rates and all that, and at some point we have to go into a rising rate cycle. We have to, otherwise we will have hyperinflation here, and we'll be wheelbarrowing our money around, and our dollars in wheelbarrows to buy a $100 loaf of bread. I mean, that's what we're going toward, right? If they don't, and it's the Federal Reserve's job, one of their functions is to control the monetary supply and control inflation. So they create inflation when they need to for convenience, but then they have to control it. We haven't gotten to the control phase yet. All right? I mean, look at this market. They overinflated, first of all, and I suspect there's a lot of political reasons behind that, especially since I learned, I never realized this before, and I probably should have known better, but I learned that politicians, a lot of politicians, are stock market investors. All right, so, and they do very well in the stock market. I wonder why. Anyway, so here's the thing. This thing has a long way to go to pull back. This is not even a pullback. So this is not a bearish market at all, not even close. We're not even at any major supports. That's a major support right there. We have no major supports. We have a minor support area right here. It bounced off of it, testing it again. But that can easily break. We have a double top up in here. So I have very little faith in the stock market, especially if we go into a rising rate environment. This thing has a lot of room to correct and to get to attractive wholesale levels, right? Let's take a look at a weekly chart. This is a weekly S&P. This is ridiculous, all right? This is stimulus. This is all that stimulus nonsense. Powell overstimulated. And, we have inflation? I didn't know that. I thought it was transitory. $100 for a loaf of bread? Is that a lot? So, I don't know. I'm worth $50 million. What do I care? This market has a lot to pull back. So to answer your question, do I have any stocks that, no, I don't have any stocks, because I believe that the stocks are still in a vulnerable position to go a lot lower. So that's why investing-wise, I have no faith and no interest in stocks until the S&P can produce wholesale levels, which we're a long way from, all right? I think there's a lot of pain coming in the stocks. People don't realize it yet. And there's a lot of people that are long who they've hoped their way all the way up here to the top. And boy, is it going to be painful pulling back. All right, now again, I don't know for sure if that's going to happen. I can't make any predictions, but I don't like this location. Can the stock market persist higher? It can. But if we go into a rising rate environment, man, that's going to put some pressure. And we will see the negative effects of that when companies start coming out with their reports. Probably we won't see that till another couple of quarters, but they'll start coming out with their reports. That will be the telltale sign that, we made some money, but we're not expecting to make as much money next quarter. When they start lowering their expectations, you're going to see the wind get knocked out of the stock market. And there's a lot of room for this thing. There's a lot of room. Okay, so I hope that answers your question. That doesn't mean that there are no opportunities. I believe that for swing trades, there'll still be some opportunities, but these are not levels to be aggressive or to be just investing blindly, thinking, the stock market, my wealth advisor told me that over time, the stock market on the average goes up 10% a year. Right, yeah, right. They always say that. These are not those type of levels. The stock market can also pull back by 50%. And that's when everyone says, my 401k, it got cut by 50%. I don't understand why. I thought the stock market was always supposed to go higher, right? But when they stop stimulating it, where is it going to go? So it's going to have to rely on itself at that point if there's nothing coming in to help it. And I'm very curious to see how that turns out, okay? So anyway, I hope that answers your question. I know there's a lot of opinion in there. The market's going to have to prove things, but I just don't like the location, okay? Anyway, so I hope that answers your question. Let's see, Anthony, can you check CCJ? Sure, okay. Here's what I'm going to do. I'm just going to run through this. I got to wrap this up, so let me just run through this chat real quick here. Let me see here. Yeah, let me just run through this chat real quick, just see if there's anything I can answer right off the bat real quick. I'll answer CCJ. Alex, ETH has been holding up pretty well, but if recently trend line, okay, are you anticipating a higher? Well, watch Bitcoin because, like I said, Ethereum is holding up. I think it's doing okay, but if Bitcoin breaks, then Ethereum's going to break. So it doesn't. The Ethereum chart itself doesn't really mean a whole lot. How these charts are useful is having specific prices to measure your risk from or to place your stop and use the price structure for that. But as far as signals and as far as momentum, Bitcoin is really all you need to look at. Okay, so if Bitcoin breaks, it doesn't matter what kind of optimistic things we see in Ethereum. Ethereum will break too. It doesn't do its own thing. So I hope that answers that question. Hey, Gotham, good to see you. From the Bay Area, haven't seen you in a while. How are you? All right, good to see you. T, okay, let's see. Vartech. Someone had asked about that Vartech, my previous stream. I have no idea what that is. All right, maybe you can give me a more specific symbol. Ryan from Phoenix. Okay, okay, so got YFI covered that. Just look back on the stream. Martin from Argentina, welcome. Okay, comp looks like reef. Could you check it? Comp? If you mean the NASDAQ, then this S&P chart. If you're talking about comp, or is comp a coin? Hold on. Let me just take a look at that real quick. Comp, USDT. Is that a coin? Oh, it is a coin. Okay. So, yeah, it's the same situation. These things are at these support levels. Look, even of a lower high here, this thing doesn't look as good. Reef actually looked a little bit better. You do have the little higher low pin bar trying to develop here. Of course, the candle needs to close. You have taken out this resistance. Okay, I could see that. Yeah, it does look similar. It does look similar. I guess what's catching my eye, though, is all of this previous structure, which I know is similar to that other one. All right, let me go to CCJ. I don't want to skip that one. Hold on. CCJ, stock. Oh, Cameco. Okay, let's take a look. So now, like I said, I just finished talking about the stock market, right? And here's a stock. Look at this. Look at this pullback. So this is a weekly chart. You're in an area of support, potential high or low support. But if the stock market gives way, then these stocks are going nowhere. All right, so something to keep in mind. As far as a swing trade goes, yeah, you know what? You have a compelling area for a swing trade. You have a bullish pin bar. Pin bar high gets taken out tomorrow. You have a buy signal off of an area that makes sense for a buy signal. So you have all of that going for you. What you don't have going for you are these lower highs. Okay, this is what you have going against you. So that reward risk, though, may be sensible. So what is the low here? The low is 20.03. What is the high here? 22.96, basically 23. All right, so if you're buying this thing at 20.78, you're risking about a point. You're risking about 1 point, right, if you put your stop below that low. And you're going for 1.5 to 2 points. You know what, that's a reasonable reward risk based on this structure. Even though the structure's working against you, it doesn't even have to clear the structure for you to beat your reward risk. So that's a sensible swing trade. All right, I like that as a swing trade idea. Just keep in mind that NASDAQ and S&P, if they start doing something really bearish, you know, obviously this thing's not going to go much further, right? It's not going to go very far. So if you take a trade like this, let's go to the S&P again real quick. The S&P closed today, closed red, but you have that little tail. So maybe you get like an inside bar tomorrow, possibly bullish on the S&P, maybe. You get something like that, that may be a positive for CCJ. Just keep in mind, we're in a holiday week. I think typically price action tends to be optimistic, but with some of this, I don't know. When I look at oil and I look at like things like oil getting beat up and I see the dollar doing what it's doing, I don't know. It's like, oh, what optimistic news. I mean, look at oil. Oil's got that pin bar too, which is interesting. And oil is a big driver. I think the energy sector has kept the S&P going for some time. So you will see a relationship there. And oil, so oil getting beat up like that is interesting. I bring that up not because CCJ has any relationship to that, but watch that S&P if you get into this type of trade. I guess YouTube is saying, all right, time to cut this guy off. Okay, see that? Look at that. YouTube doesn't like me anymore. The YouTube algorithm is just trying to kick me off, saying, all right, enough of this guy. We've heard too many rants. We're tired of you. Stop talking. Okay, anyway, so, hey, everyone, I got to wrap this up again. Come back Thursday. I will stream again to answer your questions. The whole idea here is to provide value to you, to help you get perspective on what's going on, and to help you better manage risk. Because like I said before, we have so much working against us. We need to focus on risk and decide if we want to take that risk. And if we do take the risk, we have to adjust as the market provides new information. Okay, managing that risk, whether making it smaller or whatever. You get what I'm saying. Okay, so if you'd like to know more about Greenbridge, you can click on the descriptive portion of this video. There's a few links in there. We have a free trial, that kind of stuff. Also, if you'd like to know more about some of the techniques that I use 6 specific techniques that I don't explicitly mention here, but I outlined them in my ebook. That's the whole gist of what I do to get perspective in the market and to try to align my positions with the right side of the market, right? And avoid opinions, avoid feelings, and avoid what other people have to say. It's all based on price action, right? And price action is a reflection of reality. That's a basic tenet of technical analysis. Price is a discounting mechanism. That's the whole philosophy behind the whole thing, and why we could look at charts, and charts can offer some clues as to what is likely to happen next, and we can position ourselves in a way that is aligned with what the market is saying it wants to do, instead of we think we know what it wants to do. All right, does that make sense? All right, everyone. So again, thank you all for spending some time with me here today, and and I hope you all got something out of this. So wherever you are in the world, enjoy the rest of your day, the rest of your evening, and thank you very much for watching.